Welcome back to In the Loop. We just got those personal income and spending numbers. I just want to run through them for you because we've got Jim Sullivan here, standing by with his take on these. Personal income up 0.3%, but what was really a surprise was personal spending. Came in at up 0.8%. That was even above the estimate of Jim O'Sullivan, the chief global economist for MF Global. And Jim, given this, a lot of people say these are great numbers, spending, but, can we sustain this? Can we?
Well, 0.7 a month, absolutely not. I mean, obviously, the previous month was much weaker, and these numbers bounce around. So it is evidence that the consumption numbers aren't as weak as, say, the second quarter data we're showing when we had 0.4% growth for the quarter as a whole for consumption. So it's a good start to the third quarter. Now, that said, there are still some questions here, of course, in that the confidence numbers seem to have fallen since July. Tomorrow, we're going to get the Conference Board confidence number for August, and it's probably going to show a huge drop, probably a below consensus number.
Yeah, reading expected to be at 52.
And we've got 47.5. So
wow.
Even though there is some evidence that on a daily, more timely basis, the confidence numbers are starting to come back again in late August. There's a daily tracking from Rasmussen, for instance, that shows that this Conference Board number will basically be a first half of August print, and it looks like confidence really did plunge in the first half of August.
Now, Jim, Bernanke is leaving open the door of looking at more data before the September, the 2021 meeting. Is there anything that's going to really change in these numbers, you think, until that meeting takes place by the Fed?
Well, every week we get more data, of course. I mean, this week we're going to get the ISM on the manufacturing side, employment on Friday. Of course, we'll get another weekly claims number. And of course, claims in particular have been encouraging recently in that they've been holding in around 400,000. They actually show a net decline. So absolutely,
right.
What happens in the numbers as well as the markets over the next couple of weeks will influence what they do at that meeting.
Well, what are they going to pay attention to most?
Oh, well, I mean, certainly, I think the claims numbers are very important to watch.
Okay.
The next set of ISM data
because
are very
they're good leading indicators?
They're arguably very timely coincident indicators. They are officially leading indicators. They're in the index of leading indicators, but in truth, their lead time is virtually zero. But they are excellent coincident indicators. And people are on recession watch right now, and frankly, claims are just not showing recession at this point. So that's encouraging. I mean, that would certainly hold back the Fed from being very aggressive. It wouldn't necessarily stop them from doing maybe a more intermediate step and changing the duration of the balance sheet. But at this point, the numbers don't look weak enough for them to go and increase the balance sheet again.
Jim, is there any scenario where you could see Bernanke and company moving quicker on QE3?
If the numbers start to signal recession, yes. I mean, I think ultimately they'll do whatever it takes. But at this point, the numbers don't show recession.
So that means if claims start to go down?
And I would say if you see confidence numbers continue to go down. Again, tomorrow we're going to get a very weak Conference Board number, but the more timely numbers suggest, if anything, confidence is actually starting to come back, just as the stock market had a reasonably good week last week. Those two will probably go together to a large extent. We'll see what happens to claims as well. So I think people should be braced for a certain amount of weakness in the numbers this week, a sub-50 ISM number, probably a pretty weak rise in payrolls on Friday, probably not negative, but pretty weak. But we'll watch the more timely numbers like claims and the confidence data, and the equity market matters as well. So all those things will influence perceptions on recession risks.
Equity markets on recession, not so much on the thinking of the Fed.
Well, I think it does feed into the Fed to some extent, and certainly the more the stock market goes down, the more confidence is likely to go down, and the more likelihood the Fed will have to come in with something more aggressive. And again, markets do seem to have stabilized over the past week. I think optimism has gone up a little bit that we're averting a recession. And again, if this is just a very slow period and momentum can start building up again, then the Fed doesn't have to come in and be aggressive.
Yeah. Okay. Jim, thank you. Really appreciate it.
Thank you.
Jim O'Sullivan, the chief economist for MF Global.